All right, good morning, everybody. SPX gamma flip point 6273. So, number one thing seems to dominate the news today is the chips willing to pay some of their profits to the US government to allow them the privilege of doing business with China, and lithium mines and anything lithium connected to China and their perception that there is an abundance of lithium and that they need to dial it back, slow down the production in the mines, and move lithium prices higher. That's whacking EVs and pretty much anything else that's got to do with lithium. Those are the two big ones. Uh, Subtle, quiet little news on pot stocks continue to push those like MSOS ETFs and other individual. There's still such a long ways to go that those pot stocks are still broken trash, but a little bit at a time. Otherwise, the big stuff is not today. Tomorrow we got CPI. At the end of the week, we have OPEX. Next week, we have VIX expiration and then Jackson Hole. And by the end of the month, we're going to have NVIDIA earnings. So when we look farther down the road, we can see these events waiting for us. The big one tomorrow. So when we have something big like CPI tomorrow, the concern is that today we won't really do much of anything. One of the things that I hear from traders all the time is they don't know what to expect today. Is it supposed to be a trend day? Is it supposed to be a range day? If tomorrow's a big day, our base case argument is for today to be a bit sideways as everybody wants to kick back and anticipate tomorrow and not try to trade in front of it. So the base case would be let's hold the line, go sideways, and not really break out and run today. It doesn't mean we can't, right? We're just trying to gauge what kind of day should we have today. Because of tomorrow's CPI and with nothing scheduled today really big on the home front, base case is we go sideways, we hold the line, try to digest the moves that we had from last week, and just heal a little bit while we wait on tomorrow's data. And look at tomorrow's data. I mean, there's a lot of stuff, not just CPI tomorrow. For today, we have front end auctions, which you could just look at like the IRX and monitor that, right? So we got like nothing today. Oh, yeah. Nothing except the US China tariff deadline. So keep your eye on the White House, anything he happens to be doing, chipping teeth, because he hasn't said anything. They kept asking him over the weekend, hey, the deadline is coming up. What are you going to do? And he didn't have an official statement. So yeah, that's a big like unknown. Another reason to believe that today is going to be a hurry up and wait day or a sideways day while we wait for news on whatever he's going to do with this tariff and or tomorrow's CPI. It's not just about trying to figure out what's in the charts, right? Because whatever we want to trade is getting influenced by outside things, and we've got to try to figure out, are we even supposed to move today? Overnight volume 49,000. It seems a bit light just because, for half the year we were hammering at above 100, but we're getting back into a more normalized state. Anywhere between 40 to 70 is fine, just sitting in a light range. It's not a great amount of volume, all things considered, but it's certainly not, at a level that would make me concerned, like 20,000 or 30, then I'd be concerned. But at nearly 50, it's good. We pressed around the call wall, haven't been able to claim it, get above it. We can, right? That call wall is not set in stone. It is just the place where we expect to see them monetize long calls. So they're selling calls at that level. Price can push through that and continue to move higher. It would just be a lot harder for price to move higher above that level. The analogy that I've used before is a runner running up a steep hill. And we're not saying that there's a wall in the way to stop him from running, just that the higher he goes, the more weight we pile onto the backpack he's carrying. He can still run, he's just going to have to do it with a lot more weight. As you can imagine, the farther he goes, the heavier it gets, the harder it is for him to run. Still go, nobody's standing in his way. That's price against this call wall. It can go higher, it's just going to have to work a lot harder to do it. So we expect to see that call wall move, or for price to back away from the wall. And since this is OPEX week, there's really no incentive for them to come in and move that wall. Why would they spend a bunch of money to move it for just a few days just to spend more money to roll out into the next expiry? They're very likely going to just roll out into the next expiry early if they need to, right? Say we jump above the call wall, get to 6,500. They would just roll that call wall out into the next expiry. They wouldn't even bother staying in this month's range. As we've been doing the last few weeks, want to focus on the daily to kind of highlight this pattern, or maybe a lack of pattern. So we got the low, that is not in dispute. At the moment, though, we're still looking for, are we going to get a lower high? And we don't have an answer to that yet. Some could argue that this was the lower high. I am not going to call it that. And at this point, since we haven't fallen away, we have not yet set a lower high, which means is if we continue to hold this and we continue to press higher, we could set a higher high before it's all said and done. We just got to get above that level. So if we pull back into Friday's open, or Thursday's close, then this is still not yet a lower high. And this is the range that we have to get out of. We are IX10 at this point. Yesterday was an inside day. Now we are IX10. If we close outside of this box today, then the IX10 is done. Otherwise, if we close inside this box, we're still IX10. Which is a fancy way of saying inside day with more than one day. It's not an overly narrow range, so not as impressive. Back here, these two are much more narrow, right? So being stuck inside something like that, or even one of these, or one of these, if we have multiple inside days inside of these really small candles, that is one to pay attention to. But this is a really big range and we're stuck inside of it and kind of, like, yeah, who cares? Get going. So what we can say is it's back above the 10. We got a 310 cross, which is a surge signal, and we're pressing on the upper edge right where we were on Friday, the same place we rejected on Thursday. So GTFO, get out of the box, test highs, set the new high, and change the narrative on this topping pattern right now. Seems simple enough when you say it that way. Like, that's all we need. We are basically flat this morning, running around like a hamster on a wheel. We haven't got anything done, even with all of this work. So if we think about, the narrow range, and we're just going to ballpark it here, kind of short and sweet. There's 1900, right? It's 7 o'clock. So that's the low end of the IB. And that's the upper end of the IB. So there's your initial balance. And we poked outside and came back in, poked outside and came back in. And now we're back inside. So, after all that work, we had a really nice move in the kill zone. But other than that, we got nothing. Got to focus on the ADR lines for today. We can hit the lower one because it's inside yesterday's range a lot easier than we could hit the upper one. because we would need an inside day breakout and a breakout of this IX10 range to hit this one. It's also a big options level, 64.50. So if we get close to it, we'll gravitate to it. Otherwise, focusing on yesterday's midpoint would be helpful. If we do start to fade back, $53.97.5, that's basically 5,400. No reason to really split hairs on that. And we already knew that 6,400 was a level to pay attention to. So surprise, 6,400. The half back of Friday. Now, I'd say tighten it up a little bit and just use the inside day of Friday as the starting point, right? It's a narrower range, and it's likely to have a cleaner half. So 6402, that gives you an overlap of about 5 points as a zone. 6402 to 6397 or whatever it was. That's the zone you have to get through if you're looking for shorts, and if you want to get this lower ADR, which is on a cog line 63.92, take it. So if we can break our own Globex low, that's the target. If we can break our own Globex high, that's the target. Not bad, really. It's 20, 30 points either way ish. The floor pivot for the week is higher than last week. That's bullish. Price opened above it. That's also bullish. I'm a little concerned to how far away we are from that weekly pivot on the open here this week, but it's not too far yet. It really just limits our upside on the week, which folds us back to the idea that we've got OPEX at the end of the week, and on the bigger picture, we're really not expecting anything too big this week because we're likely to see markets sit sideways waiting on the big OPEX day. This kind of reinforces that idea with us being so far away from that weekly pivot to begin with. The daily pivot, much higher than yesterday's daily pivot. That's bullish. Price opened above it. That's also bullish, but it's a wider channel than Friday, and a pretty wide channel, all things considered. A wide channel implies that if we do break out, the breakout doesn't stick, and we likely come back in again. Well, I mean, we tried to break out already, and it didn't stick, and we certainly came back in. We haven't hit it yet, so that's an MDP. It's a missed daily pivot because we have not hit that pivot, but it don't count until tomorrow, because at any point today, well, I mean, we could hit the pivot, then it wouldn't be a missed daily pivot, and then we wouldn't care. So we got to get through the day without hitting it, which seems very unlikely. Markets want to hit that pivot. They hit it most of the time. So the base case argument is we're going to break our own Globex low and hit that pivot. That would be the base case argument. Then get into 6,400, overshoot that into yesterday's half, which is the pivot channel's bottom. So now multiple levels of support at 63.97. This is the half back of yesterday, and it's the channel bottom. Likely that is our flipping point, and then we just hold the range, right? Because that's what we're expecting to do today, is just hold the range. We're not really expecting to test the lower edge of the range because we're not supposed to be bearish, and that would start to get a little bearish. But as long as we're inside of yesterday's price, then we're getting our job done for the day, which is to do nothing and wait on data. If we do start to run, 64.44 is R1. That would be the level to focus on, and the upper ADR lines, of course. But 64.44 R1, and then 64.50. 2 weeks ago, we built this distribution up here. It became the value area with the point of control. And then last week, we tested that zone. We wasn't able to keep it, but we got up there. We put in a lot of work and we was rejected. And now we're back to this area again, and we're putting in a lot of work. Obviously, it's not any sort of first touch rejection, or we already would have fallen away from it. But we're here and we're building it out. And we want to keep our eye on this zone. This is the wrong time frame to really dial in what we're doing for today, but it is the perfect time zone to look back and see how what we're doing today layers out over the last few weeks. And this is a really important zone. Anything above 6,400 is adding to this range that we've been putting in now for a while. All of this work. So we're just putting in the work up here. We got to remove all of the liquidity that's over our head so that price has to reach higher for discovery, right? And as long as there's still a lot of players sitting right here, we can't get past them. So we need to take all their stuff off the table and look for price to move higher above this. Otherwise, we're just filling in this zone over multiple time frames, which is what this really highlights. So here we can see that's where the point of control is. This is 10-day, 30-minute. So it goes back over those last few weeks. 6411 cog line, and we've put in a lot of work here. This point of control is not going to move anytime soon. At least a week, if not two, before this point of control moves. So it's here to stay. The question is, are we also going to stay with it, or are we going to finally expand away from it? This isn't a predictive model. It's not designed to tell us what's going to happen next, right? It's just showing us what we've already got. We don't have a VPOC from Friday because we've already hit it, but it was a first touch play, and I would say it's still in play. So we want to keep your eye on Friday's point of control. You can see how we came down and we put in just a little bit of work there, but we was not able to get through it. So while this is not a VPOC, it is a POC, point of control. And at the moment, it has some weight to it. So you're going to want to really keep your eye on that. I'm going to put mine to the nearest round point, but if you want to nerd out on this, you could zoom in really tight and get it to the tick, which looks like 6409.25, maybe 0.5. I'm not going to fiddle around with it. If you go to 10, you'll be above it. If you go to 9, you'll be below it. And 6411 cog line is very likely more valuable than the 9 or the 10, even that if that is the point of control. All right, on Friday, we looked at this week's range, and it was much narrower in scope than last week, which kind of gave us the idea that this week would have a lot of sideways weeks, a lot of sideways days where we would anticipate not really doing much, sitting and waiting on data. That's what this says too. So base case argument, is today going to be one of those breakout rally run days? I mean, news can always do that, right? And we can't see news that we don't know is coming. So it's absolutely possible we could get some, unknown headline news, whack the market and send us careening off into space. Without it, it's very likely today's going to be a sideways day. With that in mind, if we do start to run, oh, it's going to run. There's absolutely nothing to get in its way to stop it, right? It's just going to run. So I'm going to play the reversal if we get the opportunity, but if the reversal fails and it just keeps going, I'm not going to try to reverse it again. Just play with what we get. more than 2.5% above the 10. That's the 10-week. We're just holding the line here. We're not overbought. We're not overextended. We haven't moved too far, too fast, and it doesn't owe us any sort of a pullback or mean reversion. On the daily, we're sitting in the sweet spot. We spent a lot of time this year just sort of holding in this range here, a little higher than this, a little lower than this, but it's a good place to be. It's also, again, not overbought, not overextended. We haven't moved too far, too fast, and it does not owe us any sort of pullback or mean reversion. So the base case today is that we're just going to hold the line and go quietly through the day today, setting us up for tomorrow when we get CPI. Gold miners are down with China. China's down a very small amount. The triple leverage stuff is getting whacked, but like KWEB is a good representation of China. It's not down enough. Our benchmark is 0.5%. Same with MCHI. That's also like a broad general China ETF, and it's down a little, but not enough to meet our qualifications. So a little weakness in the China stocks, but not enough, not yet. Nat gas is down, and really, I don't know anybody who cares. And then the miners getting hit. But flip it around, Bitcoin's up. Bitcoin, energy, consumer discretionary, bonds, energy. Financials are wanting to be up. They're just not up enough. Same with that generic energy. It's up some. It's just not up enough. Right? So moving in the right direction, a little bit of a push. We just need more out of it, and we don't have it yet. So keep your eye on the broader market. And then, like the Mag 7 group, they're green, just not enough. We need a lot more out of those. It always comes back to what's going to move price today. And of course, we never know, right? It could be options flow, could just be headlines, dollar treasury commodity yields. We always have to ask that question, what's driving the market today? Because if you're trading whatever, Facebook, the ES, the NASDAQ, price isn't moving solely on its own. Price is moving because something else is influencing it. If it's options, we won't know until we get into the day, right? Because we don't have enough options data in the pre-market to make that assessment. Dollar treasury and yields, we would have already seen it if we were getting big exaggerated moves, say like the 10-year here. That was an exaggerated move, couldn't miss that, right? Or the dollar here, big exaggerated moves. We don't have that this morning. It's not the dollar, it's not 10-year. Take a look at oil, gold, precious metals, commodities, see if they're making any moves. But otherwise, we're just sitting on hold and we're waiting for something. Headline, something. And if we don't get it, we're likely just going to sit sideways and wait. Hurry up and wait. So it's not just the miners, it's gold, silver, and the miners, and FXI. So that does put China more negative than what we were looking at, not just weak, but now just straight up more negative. But that's it, right? The others like KWEB, they're not down enough. Chips are down, but not enough. Emerging markets, that's basically China. So flip it over. Pot stocks are leading the way. You don't want a rally day on pot stocks and solar stocks, right? No, don't want it on solar either, if it happened to have been up here. So Bitcoin's good. If we're going to get a rally day, having Bitcoin up is a good thing. Same with cloud computing. That ties back to the Mag 7, is like Google and Amazon are big cloud names. Otherwise, that's all we got, right? Bitcoin and cloud. It may be too concentrated to give us a breakout rally day with just those names. The concern would be, though, if we start to see those roll over, then we have nothing else to support us, and it's likely we could test the downside. Not for big shorts, right? Like just for intraday, play some, short-term shorts. Otherwise, we got nothing today, which is what we expect, right? If we had a big tail that gave us a directional push, then we wouldn't have the bias that said today's likely going to be a sideways day. And I don't know how many more times I can say today's likely to be a sideways day. Right? Although inevitably somebody's going to ask me, what do you think today's going to be? Everybody, be careful, be safe, have a good day. I'll see y'all tomorrow. It's supposed to be a sideways day.